compliance solutions. We're really happy that you've joined us for this session, and we hope that the information that we're sharing today will really help as you're going through your filing process this year. I am your moderator. My name is Geneva Brock, and I'm the Marketing Projects Lead here at ZenWork. I've been here for just a little under 2 years now, and my main role is providing compliance content to our users. So my main focus here is just making sure that you have information that you need for successful filing. Our host, who's also here with me on this webinar today, is Ed Pratt, and he is our COO here. And he's been with the ZenWork team for over 5 years, and he uses his 15+ years of experience in compliance to prepare all of our users for 1099 e-filing. And so you'll be in good hands with Ed today. Just a couple of housekeeping items that I want to go over before we get started here. If you have any questions, you can feel free to use our chat box and just ask those anytime throughout the session. We'll be answering as we can, and then we'll also save some time at the end of the session for some question and answer. If you want the notes from this session, we'll be sending out a recap email, and that will include the recording of this demo, then also a print-friendly PDF of these slides, and then we'll also answer any questions that we weren't able to get to during this session. One thing to note here is that we've got some questions for you too. We're going to have some poll questions during the session. We'll have 4 of those to be exact. And if you would like to receive your 1.0 hour of CPE credit for this session, you will need to answer all 4 of those questions. But of course, we'd love it if anyone on the session today would go ahead and answer those and participate with those. Some more information on the CPE credit. To be eligible, candidates must stay on the webinar for the duration of the entire session. So that will be a 50.
Hi everyone, this is Ed. I think we lost Geneva there for a moment. Not sure what happened there, but hopefully she'll be able to jump back in the session as we keep going here. She was giving some information on how to obtain the CPE credit. She was mentioning that you do need to stay on the session for the duration. Oh, looks like maybe Geneva's back in the session here, so let me have her take back over.
Hello, is there any audio coming through?
Yep, I can hear you now.
Okay, great. Sorry about that. Some technical difficulties there. I believe I was just talking about registering to get your certificate. We'll give you some of that information in the follow-up email to this session. But just to reiterate, just in case I'm not sure when I cut out, you'll need to stay on this webinar for 50 minutes. And in our previous webinar, we went right up against the hour mark. So if you would stay with us for the entire session, and also answer all 4 of the audience response questions that we have. So that's your information for CPE credit. And now just our agenda for today. We're going to be discussing some compliance changes, both federal and state focused. Some things that are new there, some things that you may not have heard of. And then we'll also explain corrections. Not much has changed there, but we just want to go over that as it causes some confusion for our users. And then we're going to talk about vendor form delivery options and share some information just about e-filing in general, some features, some special things that make it a little bit different from traditional filing methods. And then we're going to show you what's new on our platform and really show you around to make sure you know how to use it best. And we'll have a little bit of time at the end for some question and answer. So that's what our session is going to look like today. And before we jump into it, I'm just going to open up our first poll question here. And if you can see that on your screen, it says, how are you currently filing your 1099 forms? Are you submitting on paper? Are you e-filing through the FIRE system? That's through the IRS. Are you e-filing through a third-party system? Or maybe this is your first time being responsible for the 1099 filing, and so you may not know. Go ahead and answer that question on your screen. Looks like we're getting some responses in, but I'm going to give that a little bit more time. Make sure that everyone has an opportunity to answer there. Looks like we're waiting on one more person. Okay, I'm going to go ahead and end the voting now and share out. How are you currently filing your 1099 forms? So it looks like most of you are e-filing through a third party. And of course, we hope that you're filing with Tax1099 powered by Zenwork. But there are some other third parties that you may also be using. And then maybe just a couple people are filing on paper still. And for those of you who may not know or may not be completely sure what you're going to do for this year, we hope that this session will kind of help you figure that out. So I'm going to turn it over to Ed, and he's going to take us through some of the compliance information.
All right, thanks, Geneva. So I am going to cover the agenda items that Geneva listed, and then go spend a few minutes in Tax 1099 just showing around some of the things that are a little bit different this year. Most everything is similar, but there are a few differences, and then hopefully we'll have some time for questions at the end of the session. So as Geneva said, just plug those into the chat box there, and we will try to get to those at the end of the session. For federal e-filing, there's a few new things going on in the federal e-filing game. There are some new e-filing requirements for information returns that we'll cover, a little bit different information on the automatic extensions that you may be familiar with, and then some instructions on late filing in case you are a paper filer. Or you're using a different third party, or you're e-filing directly yourself. That those instructions will be important to know about. So let's talk first about some of those e-filing requirements that have been modified a bit. In years past, you may be familiar. You could file up to 250 forms before you had to e-file, and those could be forms of any form type. So if I had 249 1099 miscellaneous forms, I could file those by paper. And if I had another 100 1099 dividend forms for the same company, I could file those via paper as well. So I'd be filing a total of 349 forms, and I could file them all via paper because they were different form types. The IRS has aggregated those now, and so any payer, any entity, a business entity that's filing 1099 forms or other information returns for that matter, not just 1099s, but 1098s would fall in there, 3921s, 3922s, those would all fall under that same information return type. Those are now being aggregated by the IRS. So if you have a couple hundred 1099 miscellaneous forms and 100 1099 dividend forms, you have 300 total information return forms, and the IRS wants all of those to be e-filed. So for all of those of you who answered that you're already e-filing with a third-party provider, that'll be taken care of. Won't be any problem for you in regards to that. But if you are paper filing, that is something to be aware of. And even if you're e-filing yourself, that's something to be aware of. You just want to make sure that that you've got all your instructions followed there, so that you're in compliance with this aggregated return requirement. Extensions have changed for this year. You may recall going back to 2015, Congress passed what they called the Hire Act. And one of the effects of the Hire Act was to move the W-2 and the Box 7 on the 1099 miscellaneous form, the NEC or the non-employee compensation box on the 1099 miscellaneous form, move the due date back from March 31st all the way back to January 31st. And I say March 31st because I'm an e-filer, so I work in the e-filing world. But If you are a paper filer, then it moved that deadline back from February 28th to January 31st. So no matter which method you're using, paper or eFile, your deadline is now January 31st for the Box 7 on the miscellaneous and the W-2 forms. They did that primarily to help eliminate tax refund fraud. Some criminals were using fraudulent tax refunds. They were submitting fake information on a tax refund. And then when the real person would go to file their tax refund, the IRS would say, no, we can't give you a refund. We've already paid you a refund. And that was obviously not good. The Congress decided to try to move that date up and try to avoid some of that fraudulent tax refund dispersals. Even with that, you still had the opportunity to file a Form 8809. That's the extension of the automatic extension of time to do the filing to the IRS. Whether you're paper filing or e-filing, you had the ability to get an automatic 30-day extension on your W-2 or on your 1099 miscellaneous, Box 7 or any other boxes for that matter. This year, all of the all of the 8809 for the Box 7 and for the W-2, those are no longer going to be available for an automatic extension of 30 days. You're going to have to fall into one of the safe harbors. You're going to have to file a manual form, and we'll cover the safe harbors here in just a moment. But the important thing to know here is that you don't get an automatic extension of time for Box 7 using the 8809 form anymore. And again, that's just to help prevent some of those fraudulent tax refunds from being paid out. So what are those safe harbors? Basically, the safe harbors are areas where the IRS has identified you can still qualify for a 30-day extension. They're going to be more strict about this, though. In the past, you may have filed an 8809, and you might have paid a little bit of attention to that little box that says you're signing that under penalties of perjury. That's always the case whenever you're signing that 8809 form. But with regards to the safe harbors, the IRS is going to be checking up more thoroughly on those for the Box 7 and the W-2, and they're going to be not automatically approving those, but manually approving those. So you have to file this via paper. Some of the safe harbors that are available are if you live or your business is in a federally declared disaster area. Those could be anything ranging from California wildfires to hurricanes on the East Coast. But any federally declared disaster area would be a qualification for that additional 30 days. If there's fire or casualty or natural disaster that impacts the specific business, so your client, if you're an accountant, or your own business, if your business records were lost in a fire or a flood or some sort of thing, then the IRS is a bit more forgiving there, and they would be potentially willing to grant you that 30-day extension for the Box 7 or the W-2. The death, the illness, or unavoidable absence of the filer, so that person who's always done your 1099 filings, always done your W-2 filings, if that person is incapacitated during the filing season, you may be able to qualify for that as well. So basically, these are reasons why the business, is not able to just keep their regular operations going, and it could be any of those three reasons, and the IRS would be potentially willing to grant a safe harbor, or 30 days, for those Box 7 amounts that are on the 8809. There's a couple more businesses that are brand new. So the business was just established in the tax year of 2018. You may be able to qualify for a safe harbor for the 30 days additional time for the Box 7 or the W-2s. And then this last one, filers who didn't receive timely data on third-party payee statements. Those are a bit more obscure, don't happen nearly as often, but the IRS in their comment period did find some information coming back to them where people were asking for this to be a qualifying safe harbor as well. So there is that available as well. So this, again, just to reemphasize the 8809, these changes impact the Box 7 on 1099 miscellaneous, and they impact the W-2. There's no more automatic extensions there. If you have a different form type, or if you have a different box on the 1099 miscellaneous form, or rents in Box 1, for example, then those would still qualify for an automatic 30-day extension, and those are already not due until March 31st. You'd be getting a 30-day extension from the March 31st date, so you have quite a bit more time to go for that. With that, I think, Geneva, that's going to bring us to our second survey, and someone just popped in a question for NEC, that's the non-employee compensation there. But Geneva, I'm going to turn it over to you for that survey.
Yeah, thanks so much for all that information. There's a lot there between the aggregated e-filing requirement and now the elimination of the automatic extension. So we're just going to check in with a poll question here, and you see that on your screen. Which box on IRS Form 1099 Miscellaneous is no longer eligible for that automatic extension with the 8809 form? And just a reminder here, if you are looking for CPE credit in this session, you will need to answer this survey question. Looks like we're getting a lot of responses in. I'm just going to leave that open for a couple more seconds here and make sure that everybody's able to get their answer in. And I just want to remind you to make sure that you're clicking Send Vote at the bottom of your poll. If you're unable to send in your answer, that might be why. You'll need to click Send Vote at the bottom of that poll question. I'm going to go ahead and end the voting now and share out those results. So it looks like most of you have that answer as box 7, which is the non-employee compensation box that Ed has been talking about. That is no longer eligible for the automatic extension. There may be some circumstances in which you'll be eligible for a manual extension, but something to be aware of if you've been leaning on that extension in the past. This year, you won't have that safety net to catch you. Thanks everyone who responded to that poll question. I'm going to turn it back over to Ed now for some continued information.
All right, thanks, Geneva. I'm going to move forward here. So we've got some information here about the late 1099 miscellaneous forms. If you're filing late for box 7, that means you're filing after January 31st, submitting those to the IRS. If you're using a third-party provider, you probably, again, don't have to worry about this too much, but it was something we wanted to point out for those of you who may be paper filing, or for those of you who may be doing an e-file yourself, or if you're an accountant and you have a client who does the e-filing themselves, something that they'll want to be aware of. As you know, the 1099 miscellaneous forms now have 2 different dates. You've got the box 7 that's due January 31st. The other boxes are due March 31st. The situation here is that I might create some 1099s. I might submit them for my box 7 on January 15th. That's all good. I beat the deadline of January 31st. I might create some for box 1, and those aren't due until March 31st. I've got plenty of time on those, so I'm going to wait and submit those on March 31st from my e-file. But then I find out that I missed one of my box 7s. For some reason, it just wasn't entered into my accounting software. There was maybe a handwritten check that just slipped past my accounts payable department. We didn't find that out until it was too late. And so now, February 15th, I've got this box 7 form that I need to submit. Well, you just want to make sure that you keep those box 7 amounts filed separately from any non-box 7 amounts. So those ones that I have out there waiting to go on March 31st that are rent that I want to send there, I don't want to include those with that February 15th box 7, because if I do, those box 1 for rent that would be considered on time are going to be considered late. They're going to pull those all in together and say, well, you filed this box 7 form late on February 15th, and you had these other ones that were box 1s, and you filed those late, so they're going to, they being IRS, are going to potentially penalize you for late filing for all of the forms instead of just the one form that is truly late. So just keep in mind that box 7 is really distinct now from the other boxes on the 1099 miscellaneous form. There's even been some talk of creating a completely separate form for the Box 7 amounts, the non-employee income, that NEC amount. There's been some talk among the IRS and some of the practitioners who work with the IRS to make these e-files of making a completely new form just for those Box 7 amounts, and we'll see how that turns out. But you never know. But this is just something to keep in mind in case you are winding up having that situation where you need to file something late for the box 7. Just keep it separate from your other boxes. In Tax 1099, of course, we do that automatically for you. Even if you submit them at the same time in January, we can schedule them out for separate dates, and you get different reference numbers for those box 1s versus the box 7s, so that you know that they're being done separately. For state filing, depending on where you live, you may not care at all about state filing. If you live in Florida and all of your companies are in Florida, or all your clients are in Florida, you don't have any state income tax, so you don't have to worry about state filing, and that's a plus for you. But if you live somewhere else, you may need to be concerned about state filing. The combined federal state filing program has been around for a while now, and there are about 30 states that participate in that combined federal state filing program. That makes it really easy if you're e-filing, especially through us, or possibly another party, a third-party provider. We will do that combined federal state filing for you automatically. We submit the information to the IRS. The IRS will then turn around and submit it to the state. From the state's perspective, that's also good because they know they're getting the information. The bad thing from the state's perspective is that they are often not getting that information until June or July or August of the year after the tax filing. So we have situations sometimes where a client of ours will contact us and say they got a letter from their state saying that they have not filed to the state. And this is a combined federal state filing program state. So they ask us why the state would be sending them a letter saying they didn't get that. And we've talked to the IRS about this, and they say, well, it's because we haven't sent it to the state yet. You know, the state's gonna get it, but we haven't sent it to the state yet because it's just hard for us, the IRS, to send that information over in a really fast manner. I was in Orlando at the IRS Tax Forum back a few months ago, and one of the points of conversation was about this combined federal state filing program and what changes the IRS is looking to make to that. So they're aware that there is an issue with getting information to the states and on the state level. So they are aware of that and trying to get that information done and pushed over to the states a bit faster. As with anything with IRS, it's kind of dependent on what their funding is and what their priorities are, but they are aware that there is a potential issue there. So when you think about state filing, those are a couple of the instances of state filing that you might run into. One is that you don't have any obligation whatsoever. You're Florida or Texas. You don't have any state income, so there's no filing. One is that you may be in a combined federal state filing program state, which again makes it pretty easy for you. We'll just take care of that for you at Tax 1099. A third way, though, might be the direct filing states. So a few more states, and it seems like this happens every year, every couple of years here lately. Another couple of states will move to a filing requirement, a direct filing requirement. So Massachusetts moved to that a couple of years ago. A few years ago, Pennsylvania and Oregon moved to that direct filing requirement. That's because they are, frustrated with the possibility of getting that information late from the combined federal state filing program. More and more we're seeing those states move into the direct filing business and requiring a direct filing. Even with the combined federal state filing program, this is a kind of a fourth instance of what may happen. You may have a state that says we'll take the combined federal state filing program filing. But if you have an instance where you had to withhold some state tax from the payment you made to your vendor, we're going to require a separate filing from you for that 1099 miscellaneous form that you withheld that tax on. And so that is a potential another potential issue there, where you just kind of have to be aware of what the state rules are. We keep track of the state rules. It's part of our job here, is to just kind of be the analyst that helps with your tax compliance. And so we do keep track of this. We have staff internally who do that. We also hire a third party consultant just to kind of back check what we're doing and making sure that that we're all squared away on the state filing. So you want to make sure whatever you're using that you're in compliance with your state filing. We can look at the software in a few minutes. That's one of the things that we'll talk a little bit about is just how the state filing has been advanced a little bit inside of Tax 1099, making it a little bit easier for you to go through that. So again, we're just automatically identifying those filing requirements based on the state of residence for your recipient, and then we're going to make that a little bit easier for you, we hope. The next item that we've got here is corrections. How to do corrections, how to make sure your filings are being accepted correctly from the IRS when you have a possible problem. This comes up when you've already made your filing to the IRS. So let's say it was a box $7 figure and you filed it for the January 31st deadline. Everything's good. Then you find out in February and March that you actually included a payment on that form that should have been considered an expense reimbursement. It wasn't a payment for services rendered. It was something that should not have been included on your 1099 miscellaneous form. That is a type 1 correction, and we don't make up this type 1 type 2 distinction. This is straight from the IRS. The type 1 correction is a simple amount change that needs to be changed. It could be that you're just moving it from, say, $15,000 that you paid to that vendor to $14,000 that you paid to that vendor. So it could just be a straight dollar figure change. It could be that you find out that you didn't need to notify that vendor at all. They're a C corporation and don't need to have a 1099 miscellaneous received, and so that is a possibility. And then you would void the form. You would check the corrected box, put a $0 figure in the box where you would put the amount in before, and zero that out. So those are the easy ones. Type 2 are a bit more complicated. For the type 2 correction, those are where you've gotten some incorrect information from a vendor. Maybe they put in their social security number or their name incorrectly on the W-9 form. Or maybe they put it in right on the W-9 form, and the person who was entering the data just couldn't read their handwriting very well, and so they typed it in wrong when they put it into the accounting software or Tax 1099, and so they transposed a couple of the digits or just got a digit incorrect on the social security number. Those are a little bit tougher because you first have to void out the incorrect form, so you have to submit a voided form, a $0 correction form for the bad form information. So I've got to use the wrong social security number that I already filed under and put in the $0 amount there, and then I've got to create a brand new regular form, not a corrected form, but a regular form with the right tax identification number and name combination, so that is submitted to the IRS and everything is squared away and back to what it should be. So a couple different ways of doing the corrections there, and depending on your circumstances, you may need to do either of those. And those are available on paper filing. They're available through our platform. So corrections are something that you may encounter that you have to do, and just want to make sure that you guys have some familiarity with doing that. Geneva, I think that's going to bring us to our third survey question.
Yeah, so we have just a quick check-in right here about corrections, and you'll see that on your screen now. If you needed to change the box amount on a form that you submitted to the IRS, what type of correction would you need to make there? Got your type 1 or your type 2 correction? We're seeing a lot of responses coming in. Just a reminder, click that send button, and if you are looking for CPE credit from this session, you need to respond to all of these questions. A couple more seconds here. I'm going to go ahead and end the voting now, and we'll share those results. And it looks like most of you have selected the type 1 correction, which is correct. That is the type of correction you would make if you just had a box amount that you would need to fix. That's the more simple of the two corrections that you would have to do. And we hope that all of your filings will be correct the first time around, but if not, it's good to have this correction information. And I'm going to turn it back over to Ed now.
All right, thanks, Geneva. We're going to look next at vendor form delivery options. We've got this split into kind of the traditional and the modern style. The traditional is printing and mailing those. So whether that's taking the paper copy, if you're using paper filing, and just taking that particular copy and sending it out to the recipient, or if you're using Tax 1099. You're printing the PDF and mailing that out. That's available. You can use a third-party postal provider. That's what we would be considered there. We would be mailing the forms for you if you choose to have us do that. So that's a traditional. People who like to get their paper forms can get those paper forms. You also have the option of doing electronic delivery. You could do that by email. You could do that through a secure portal. Just a couple of things to know if you are doing the electronic delivery. There's some regulations or some requirements from the IRS. You've got to make sure that you do have permission from the vendor to send that form electronically. So if you're sending it by email, you can just collect that via email from the vendor. If you're sending it via portal, you'll collect that opt-in through the portal tool that you're using to gather or to send that electronically delivered form to the vendor. If you use Tax 1099, then we do have a portal delivery option for you that you can collect that opt-in, opt-out, and we take care of those requirements for you. Just a couple other things. They have to be able to get their PDF copy, so they have to be able to download that. Got to kind of give them a way to do that and place to change their address. So you've got to make sure that you're covering the bases there for your electronic delivery. It is, I would say, a little bit easier to do electronic delivery once you've got that opt-in, once you've got that buy-in from the vendors. You don't have to worry about things getting lost in the mail. If they need another copy, you can just trigger a new email to go out to them and send that directly back out to them. Then they've got it either in their email or in that portal. They can go out and they can download it for themselves and access that on an electronic basis, save it out to their files as they may need to. A few extra things here about e-filing, little known facts. Joint submissions under a payer. So one of the things that the IRS frowns on if you're doing paper filing is they really don't want to get different batches for the same payer. And you can understand that from the IRS's perspective, because if they're getting paper filing, they have to go through a whole manual, cumbersome process to take that paper filing that you've sent to them, the 1096. They've got to take the paper copies, the A copies, the red copies. They've got to take all that information. They've got to scan it in. If the scanning doesn't work, they've got to back it out and figure out what went wrong. They've got to make sure that once they've scanned it, all the information goes to the right fields in their database. So a lot of work is required, and they don't really want to get more than one submission under any given payer. When you're e-filing, that doesn't matter. You can submit your e-files in different batches if you want to. You can submit them one at a time. You can submit as few as one, as many as 100,000 at any given time for the IRS. And in fact, I think on our side, when we send stuff to the IRS, we can do a couple million at a time when we're e-filing out to the IRS. So the e-file that allows you to do as many submissions for any payer that you may need to. So you don't have to worry about triggering any warnings or any concern from the IRS if you're submitting more than once. The 1096 itself is not something that exists anymore once you start e-filing. That's one of the reasons to e-file. You don't have to find those 1096 forms. If you have done paper filing in the past and you've maybe bought them at Staples or somewhere, you may get 25 1099 forms and you might get 3 1096 forms there. So you've got 3 shots of getting that 1096 right. Otherwise, you've got to go buy another batch of the paper forms. With e-filing, you don't have to worry about 1096. The e-file itself replaces the 1096. And then state filing, again, with your paper filing, you may be ripping that copy off and sending it out to the state yourself. With the e-filing, a lot of the states are accepting the combined federal state filing. or in our circumstances, we can do the state filing to any of the states that do require it. So we've got some additional things available for you. A few things that are a bit new in Tax 1099. We've got a new two-way sync that's available for QuickBooks Online and Xero.com, Xero and Bill.com. That's mostly relating to sending the vendor information, collecting the vendor information, and sending it over. As you may know, we have a W-9 tool inside of Tax 1099 where you can send an email to a vendor. They can complete the W-9 online, sign it online, and submit it. You get a PDF copy of that inside of Tax 1099, and they get a PDF copy of it as well. We now have the ability to send that over to QuickBooks Online, Xero, and Bill.com. And when I say send it over, we send the vendor record itself over, but we also send that PDF copy and attach it to the vendor record in those systems. And it is limited to those 3 systems at the moment, but we do have the ability to gather the information for you or for your client if you're an accountant, and send it back over to those services if that's something that you need. That way your information's in sync in both places. And then when it comes time to file the forms, you've got the information right in both places, and then you're just integrating or importing the dollar figures from those services as well. So the sync goes both ways in that situation. In the past, this second bullet point, blocking submission for a single form, we've not been able to provide that. You had to block all the forms, or block all the forms and then resubmit the forms. Now we do have the ability to block a single form out of a reference number. So if you file 10 and you find out one of them was not working correctly, was not sent correctly, and you needed to get rid of it completely, then you do have the ability to get rid of that one form in the reference there. And then for our enterprise customers, enterprise users, we've got the notice management feature that's available in that enterprise option now. So that is something new that we've released here recently. We've gotten a couple of notices that the sound is choppy, it's going in and out. I apologize for that. I don't know. We're able to hear it on our side, so I'm not sure if it's a connection issue on our side or on your side. But hopefully that will clear up as we complete the webinar here. Enterprise accounts. So I mentioned the B notice or the notices feature that is included, that can be a part of the enterprise account. Something for accountants that are staffing up for the 1099 season. You may have 5 or 10 or 15 or 20 or 1,000 different people who are working on 1099 filing. The enterprise account itself does give you a bit more flexibility around creating your users and having them have specific rights in the system, having them have some workflow in the system, the ability to have one person enter the data and then another person review and sign off on that data before it gets submitted to the IRS. So that is can be helpful. Each person gets their own separate login and password, and those are auditable. The audit trail is available on each one of the users in there. And then you also get some TIN matches. So the TIN match allows us to validate the tax identification number and name combination with the IRS and make sure that it is correct, or if it's not correct, give you an opportunity to go and fix it before you get a penalty notice out from the IRS. So it just gives you a little bit more flexibility. If you've done that TIN match, you're aware for yourself or for your client that that you may have an issue that comes up in regard to that specific filing later. All right, so now that we've kind of taken a look at some of the things that are going on or are modified in Tax 1099, let's go take a look at Tax 1099, and let me share out my screen here and see if we can get us all logged in here. All right, so on Tax 1099, I'm just going to get into my account here. I do have an enterprise account, so that's what I'm going to be showing you. If you don't have an enterprise account, it's not a big deal, not a big difference from what I'm going to be showing to you. One of the things that you might notice when mine opens, it comes to bill.com because I am linked from our app in bill.com. When you log in, if you're not linked there, you'll just come to the dashboard straight here, instead of going to that bill.com section. This is the dashboard. So we updated the dashboard last year a little bit. There may be a couple of tweaks of this as we go forward here in the year, but for the most part, this will pretty much look the same. The statuses that are here, you'll see that I have about four, I think 1, 2, 3, 4, yes. I have four here that are a little bit different. That's because of the enterprise account. If you don't have an enterprise account, you just won't see these four. Otherwise, everything else will look the same for you, but this shows me as an enterprise user, what's been submitted for my review, what's been already approved. If anything had been rejected and then resubmitted for review, I'd be able to see those. And then the blue dots mean that they're just sitting out there. They're not submitted at all. So they're just kind of in a state where I could go in and do some further work with them. A few of the things that I've mentioned that are new this year, and a couple things that I didn't even mention that are new this year, and then I want to make sure that that I show. I'm going to go into our people menu and look at the recipient. This is where we have those syncs to Xero, to Bill.com, to QuickBooks Online. I'm going to go to a different company here just because I've got a little bit more going on in this company. What I can do from here is I can request a W-9. So you can see over here that I've requested the W-9 on November 12th for this particular vendor. They haven't sent it back. They will get reminder emails about those W-9s. If they don't complete it, they'll get a reminder email. This person did complete the W-9, so I can pull this up and look at it. This button just lets me see the PDF copy of the W-9 that that person completed and signed, and so I have that on file and on record, and I'm able to pull that up if I ever need to show it to the IRS or anyone else for that matter that I did collect that W-9. I've got it right here, everything available. The other thing that I can do there is I can sync that back. So if I wanted to just sync this back to Bill.com, I could click there, I could click the sync to Bill.com, and it would return that information over to Bill.com. Whatever's on the W-9 would go back over to Bill.com and update the information there if I had a tax ID. If this person didn't exist at all in Bill.com, it would create a new record over there in Bill.com. So that would be another helpful way of using the tool. One other thing that's new on this page now is this export to Excel for all payers. This is something where previously we had the export to Excel on a client by client basis. So if you are an accountant and you've got 10 or 20 or 100,000 clients that are out here, you can export all of their recipients at one time into an Excel sheet. And kind of the neat thing about this is that you get to determine what import tool you want to use or what import template you want to use. Most of those would be the 1099 miscellaneous. And so if I wanted to import or export all of my recipients, I could do that, and I would have a ready-made file for doing my my import back into Tax1099 based off of that export to Excel. So that's a few things there under the People menu. Under the Forms menu, I'm going to go to our Manage Forms page. This is where our forms go once they have been completed and filed. So I'm able to come in and take a look at any of my companies that I may have here. If I'm an accountant, I'd be able to look at my different payers or different clients that I have there. Obviously, I haven't filed anything for 2018 at this point, but if I go back a few years, I could see those forms out there. One thing that I just want to point out real quickly is we also have here the ability to export to Excel for all payers. So you can get all of the form details for any year out into Excel for your recipients there for all of the payers at one time. I mentioned the blocking of the forms. So down here, I have several forms that are all in the same reference number. I can see that I filed all of these at the same time because they have the same reference number there. So this is where I could go in if these forms were scheduled for a future date, and I could block any single form from there. I wasn't able to do that before. I had to block all of the forms instead of just blocking some of the forms. Something else that's new here, or new-ish, I would say, here is that I can unmask my taxpayer identification number on the PDF. I've always been able to do that, but I've only been able to do that when the PDF was in a pending status, when it hadn't gone to the IRS. It's the only time that I've been able to do that. Now I can do that at any point in time in the year. I can come back in and I can get an unmasked copy if I need to. If you are an enterprise user, we've also created a setting under the profile where you can have that set as a default. So you can have all of your PDF copies unmasked if you're the account owner, and then all of the PDF copies that you get would be unmasked. That's not something that the IRS recommends. Just as an aside, the IRS recommends masking or truncating the tax identification number on any form where it's possible to, just for the data protection of the person who's receiving that. The W-2s don't allow that, but any of the information returns do allow that, and the IRS does recommend that you do that. But we know that that sometimes you want to get that copy without the tax identification, or with the tax identification number unmasked and fully exposed, and so that is something that is now available to you out there in the Manage Forms page. One other thing that's different here this year is the state filing. So if you've done your federal filing, you've done your IRS e-filing through Tax 1099, and let's say you were in a state that did require a state filing, say Pennsylvania or Oregon, for whatever reason, maybe you didn't choose to do that filing at the time that you initiated the e-filing. That's still something that is available to you this year. You can come back in, you can select the state filing for a filing that you had done to the IRS but had not done to the state before. And so again, something that's new for you this year that we made available. And then one other thing, there's 3 extra columns that are here previously, the USPS, the email, and the state filing. We had some questions that would come up from time to time as people were checking out of the system, as they were submitting their forms. They might pick email, they might pick postal mailing, and then just kind of not really know for sure that they had actually selected that. So now we've put it here where you go to see the forms. You can easily see if USPS has been requested, or if an email has been requested, or if a state filing has been requested. So just made it a little bit easier for you to find that information without having to go back and maybe look at your receipt, or having to pull a report inside of Tax 1099 to look at that information. So I've mentioned the two-way syncs. I've mentioned the schedule dates and some of the changes there. The notices, I just wanted to point out, since I am in an enterprise account and I do have the option, I've purchased the option here for doing the notices. In the 1099 business, we often think of notices primarily from the CP 2100, the B notice mailings that we get. There's a whole ton more notices that are possible that you might get out there. If you're an accountant who does taxes for your clients, you probably are aware of a lot of those. But we have built this notice tool where you can manage that process a bit for your clients. This one is the CP 2100. It's a CP 2100A, so it's not a huge one. It's just got a few that are there. But I can go in, I can manage that process. I could see what the templates should look like that I need to mail out to the recipients. I can keep track of my progress through that. I can make sure I'm meeting the deadline dates. So I've got particular dates that I have to do this. I can upload the file, my CP2100 file. I can upload that in here as well. So I've got some ways that I can work in the system if I've purchased up into that option for the notices. So again, just something that's available for enterprise users if it's something that you feel like you need to do or want to do, and work with those notices for your clients. All right, so I've talked a good bit around Tax 1099 there. I want to take us back into the system here and turn it back over to Geneva to see if we've got questions that have come up.
Yeah, and before we do that, we have one last question here that would need all of our CPE candidates to answer, and others on this session, of course, we'd be happy for you to answer as well. Which is not required for e-delivery of forms to vendors? And your choices there are ability to send electronic files securely, an opt-in from vendors, or pre-printed forms, which is not required for that e-delivery. And as you're finishing up answering that question, if you have any questions that you'd like for us to talk about in the question and answer portion, go ahead and chat those into the box that we've been using, and we'd be happy to get to those. I'm going to give it a couple more seconds here on the poll question, and then we'll jump into that. Okay, I'm going to go ahead and end the voting here and share those results. And it looks like most of you have gotten that right. That's pre-printed forms. You wouldn't need those in the case of e-delivery to your vendors. You most definitely would need the ability to send electronic files securely, and the IRS does require opt-in from vendors before sending those forms electronically. Thanks you to everyone who participated in those poll questions. And now we'd like to answer your questions. So go ahead and chat those in. And just to get the ball rolling here, here's one, Ed, that we hear pretty often from our customers. And they would like to know if there's something wrong with the filing, which is worse penalty-wise, to submit a late filing correction or to just take the hit for that incorrect information.
First, Neva, I just want to make sure you can hear me. I've got my screen seems to be stuck over here.
I can hear you.
Okay, great. I just want to make sure. So the penalty escalates as the time goes by. So in the first 30 days, and I'm probably not going to pull the right dollar figure out because they just move them around, but in the first 30 days, if you're late for the first 30 days, it's like a $60 per form penalty. If you're late more than 30 days, but you get it in by, I think, the end of August, it's a $110 penalty. And if you don't turn it in until after August, or you never turn it in at all, it's a $270 penalty. And then they have a cumulative maximum that applies depending on the size of your business. That cumulative maximum is waived if if you're basically you know you're supposed to file, but you don't. You're just intentionally disregarding the regulation for filing. What the benefit of doing a corrected form, though, can be is if you do that corrected filing, you can always come back to the IRS and try to abate a penalty notice that you might have gotten, especially if you had a good reason for doing that correction on a late basis. If that correction was, again, due to one of those kind of safe harbor item, the illness of the person who was doing the filing, or the inability to get the information because there had been a fire or something like that. Typically, the IRS would rather you come back and do the corrected filing rather than not do, or rather than leaving it as an incorrect filing. But kind of, I'd say ultimately the penalty, that $270 penalty, is the highest that they go on a per form basis, whether it's a late filing or not being filed at all, or even filed with incorrect information, like you didn't have the tax identification number for someone. That $270 filing would be the amount for that penalty as well.
Okay, yeah, that's great. And to our attendees, make sure that you're chatting in any questions you'd like us to answer. Here's another one that we get about corrections. If there's a phone number change or an address change, would that qualify for a corrected form?
No, you don't need to do a corrected form for an address change. So if you did a form for someone and you mailed it to the address you had on file, and then it goes into the mail service and they've done a forwarding and it comes to their new address, and they contact you and say, hey, this is my new updated address, you don't have to get that person a new form. You don't have to do a corrected form to do the address change. You could do one eventually if you decided you wanted to, because that person never got the form because the address was wrong. They had moved 2 years ago and you just still had the wrong address for them, and so their change of address is no longer being forwarded. The only way to send that out would either be through doing a corrected form and changing the address, or printing the existing one, putting it in an enclosed envelope, and writing the new address out on the envelope itself and sending it. From the IRS's perspective, they're not as concerned about the address as they are about the amount and the tax identification number and the name being correct.
Okay, great. That's really helpful information. It looks like we have one from our audience here, having permission from vendors to file electronically, is that new this year? Or is that something that the IRS has been asking for previously?
Yeah, so just to be clear, you can file electronically. You're the payer who's filing to the IRS. You can choose an electronic or a paper filing yourself as the business owner or as the accountant. What the requirement is for the recipient to collect their form, their copy of the form via an electronic method. And yes, that's always been the case. That the IRS has always wanted an affirmative opt-in to receive the information electronically from the recipient, or if you're sending W-2s from the employee. If if you've worked for maybe a large company in the past, you may have had a portal where you got your W-2 or you got your pay stubs. When you go in and you sign up for that portal, there's often some fine print language that says you agree to receive the information electronically. So that's what they're doing there, is they're collecting that affirmative opt-in to get that information electronically. Same thing with the 1099s from Tax 1099. You do need to collect that information, to collect that affirmative opt-in from the employer or from the contractor, and that has been the case for as long as there's been electronic delivery.
That's a great clarification there, yeah. It looks like we have another one here. If we used Tax 1099 last year, what's the process for connecting QuickBooks Desktop again? How will we get the information over to Tax 1099?
Yeah, so and again, sorry, my screen is frozen, or I would pull this up, but we've introduced one other new thing in the QuickBooks Desktop area. We have a little wizard that walks you through, asks you some questions about what version of QuickBooks you have, about what your operating system is like. Are you using QuickBooks from a hosted provider, things like that. And then it gives you the method that you should probably use to get your information over to us. One of those methods is the plugin. So if you used the plugin last year, you installed it on your QuickBooks Desktop, and you still have that same QuickBooks Desktop, you haven't changed your version or anything, you'll just get a pop-up that'll ask you to update the plugin the first time that you go in and use it this year. So you'll go through that update process, and then you'll be able to do your 2018 filing through the same method. It's under the vendor menu in QuickBooks, and you go to the Tax 1099 option there, and just follow through the prompts to go through and push the data over. The other option is called the Web Connector. So you may be familiar using Web Connectors with other products that link to QuickBooks Desktop, and that it is just a similar process. It's an online process, basically, where the Web Connector pulls information out of QuickBooks Desktop, it pulls it out to the cloud, and then transfers it to Tax 1099. So those are the two methods that we offer for doing the integration from QuickBooks Desktop to Tax 1099.
Okay. Well, I want to thank everyone again for joining this session, and thank you also for those great questions at the end there. We're so happy that you could join us, and we hope that you were able to learn something about 1099 e-filing, and we hope that you feel a little bit more at peace going into January. And we will be following up with an email. The recording of the session will be in there, and so will a PDF of our slides. Any other questions that you can have, feel free to direct those to us, and we'd be happy to answer those. And we'll also have some information about the CPE credit in the email to come. Thanks again, everyone, and we hope that you have a really great day.